Right then. Okay. Welcome. Thank you for joining. Um, so the main event today is going to be Jerome Powell's speech around 10 o'clock. Um, Let me just get the calendar up. FX Street. So around about 10 o'clock, and we're going to cover that live. Myself and Wayne. We're going to get together, and fingers crossed, his audio is going to be all right. If we struggle with the audio, then we'll figure it out at the time. We'll just have to revert to screen sharing, and perhaps we'll have one of us on audio, and Wayne can continue in the chat room, and we can put questions to him, and he can answer us in the chat room, something like that. But let's be optimistic and hope that the upgrades will have resolved whatever issue there was with the software and not being able to hear his audio. It's very in and out like a bad Skype call. So on the last couple of occasions, which is strange. So here we have the calendar. I guess everyone can see my screen. Let me know if you can't. This is set to my time, so I'm 2 hours behind New York. So that's 10:05 Powell's speech, and just ahead of that, we'll have the Michigan sentiment, which may or may not have any impact. Now, it is questionable as to whether we're going to get any real guidance from Powell. The Fed has generally disappointed the market with guidance in the past. So, and given that how data dependent the Fed are, I mean, that's already been well communicated. There seems to be a split between hawks and doves at the Fed. The market had been pricing out rate hikes further along the curve. Um, but there appears to be, I mean, you can just see it in the price action, a return to um, higher for longer from the Fed. So effectively, where the market was expecting the Fed to at least pause and then start to tail off um, down the line, that now, I mean, if we look at the 10 years have been pretty high up, or very high up, as well as the twos. As the market starts to price in a more hawkish Fed, and that has transpired in a divergence theme throughout markets. So divergence between the central banks rather. So the Fed anticipated to be more hawkish than its counterparts, such as obviously the Bank of Japan, as well as the ECB and so forth. We'll also hear from Lagarde later today at the Jackson Hole. I'm not sure on exact timings. I think it's around um, sort of late lunchtime. I've got a schedule here from Brown Brothers Harriman, and it would appear, if I can put that on the screen as well. So there we are. This is the schedule. So we've got Friday, there's Powell speaking around about 10 o'clock, and then Lagarde over here, Christine Lagarde, luncheon address. So I presume that'll be late lunch time, US. I don't know how they're going to fit all these people in before, but apparently so. But anyway, we'll be on the news wires and we'll keep everyone updated throughout the day. So let me know if there are any pairs in particular you want me to go through. It would appear that we've had some price action already. Yeah, some decent price action, despite the Fed coming up. So we'll just look at this dollar and then we'll jump on the euro. Right, so how do we start? So we're on Friday. As you recall, I like Wednesdays and Fridays most of all because we've had up until Wednesday, you've had Monday and Tuesday. Well, you've had last Friday, Monday and Tuesday, all of last week, in fact. But nearer term, you've had Friday price action, Monday and Tuesday, and from that you can begin to form a thesis. And generally, the market is setting up for uh, uh, bigger moves, right? So you tend to get more. Well, there's more order flow built in, so that when it comes to Wednesday, you tend to. I mean, look at this here. I mean, that big sell off here in the dollar on Wednesday, because you've got Friday, Monday, Tuesdays, all of that order flow, and then the drop. So today being Friday, we've had all of the week, right? So we can look back and we've got footprints. So this is the opening range on Monday. We came down low, stop hunt, a move up, a squeeze on those shorts, and a continuation. So that is setting the stage for the week. Potentially we're going higher. We go higher, squeeze. Okay, you see a theme here. We go higher, potential squeeze. So on the dollar, technically, it looks poised for a sell-off. You've got Tuesday longs in the market. Um, Wednesday got sold off, so we've still got Tuesday's longs in the market. Fresh money coming in, so we've got Thursday's longs in the market. Topping pattern, M formation, break of structure, subsequent sell-off, displacement. Potentially there's money in this. Sorry, bear with me. Sorry. Um, about to phone back. 1 minute. Sorry. So, I mean, technically, that dollar looks as though it could be wanting to sell off. So maybe we'll get the market disappointed with a benign outcome from Powell's speech, and it'll be the sort of a sell the fat scenario. The markets have already priced in the anticipation of a hawkish outcome, as Powell is expected to stick to the script of higher for longer and um, their desire to battle inflation and so forth. So maybe that's all been priced in, and we could be in for a sell-off. On the other hand, we could easily continue going higher, but we can only work from what we've got. And for me, there's plenty of money down here to grab. So um, there we have it. Now, this displacement at some point is going to require a correction, and it could well be in the process of that at this moment. So I continuously talk about these M formations. A reversion to the origin of the move, or at least the neckline. So the neckline, and then a continuation to the downside. So you can measure that on a Fibonacci. Now, that's not to say that these work out in this fashion 100% of the time, but there is a high probability that we will see a correction, because it happens more often than not. You will see that correction into the neckline. In this case, the neckline aligns with roundabout or in between, let's say, the 50% mean reversion up into 103.80 and 61.8 ratio 103 spot 83. And we also happen to have the point of control right bang in the middle. All right, so I don't know if you can see that, but that's my volume profile. So the trade so far, the range, that is the volume profile of today's range so far. So that point of control is dynamic depending on price action. So we'll just mark that. That's where it is at the moment. So that is an upside target for the dollar. We've got a couple of hours. until the open on Wall Street as well. So um, plenty of time for this correction to take place in. And let's see how that gets on. So that would bring us then naturally. Let's move to the euro, wherever that is. So we had a first green day. When did we have a first green day? On Wednesday. That failed to produce a continuation to the upside. Let's look at the open range. I'm just going to clear up the chart entirely. Right, so Monday range. So initial balance, we broke up and slammed down. So that set the tone for the week. Strong move to the downside, continuation expected. Continuation was what we got. But we closed high, back into shorts. But the bears took over, consolidation, slammed down on Thursday. So this is essentially the Dixie chart inverted. So we've got this W formation. So perhaps a squeeze up into shorts. So we've got this W formation down low. Potential correction and continuation to the upside. Noting that we are below last month's lows, last week's lows. Breakout traders have engaged. Perhaps we're going to put the squeeze on those breakout traders. 80% of breakouts fail. This is a breakout, so it's a high probability that it will fail. It's failing, and perhaps we're moving back up to the inside. We've had 1, 2. So this is the third push out of Monday's opening balance. So initial balance. So 1, 2, third push. Okay, so this is the third push, and often what you'll find after 3 pushes, either up or down, you'll get a correction. It's Friday, plenty of opportunity here for the upside. Okay, any questions on that one? So that's the bullish bias. We better make a bearish one as well, or I'll get fired if I'm wrong in this. So a two-way outlook. Let's pull back. Excuse the sniffles, allergies in the morning as usual. Okay. So we broke that structural point there. So the bears will argue, well, we're on the front side of the move. I'm staying bearish until there is a break of resistance, which is fair enough. I mark that as a broken down market. So the bears will argue, well, longer term, I stress longer term. So if we look at one push, 2 push, 3 pushes out of the breakout area. This is going back to August, Friday, October last year. Okay, so we broke out and then we had 3 pushes. 1, 2, 3. So third push, sell off. So 1, 2, 3, break of structure, down. All right, do you see that? The market is fractal, so by that I mean what happens on the higher time frames also happen on lower time frames. The same structures, patterns, price action, you get it across all time frames. Now, in order for this to fulfill itself, generally speaking, once you've got a breakout, you'll have that correction back in. So um, we can regard up here as the um, volume up top. Okay, so all of that is trapped. We've come down, we've moved in, and we're selling off. So now that we've broken structure, you'd expect a move up to come down. So essentially what we're just going to look for is the low, the pivot point, which is over here, so down there. So that is currently resistance in anticipation of a move back in. So breaking out, we're in anticipation of a move to come back on the inside of the breakout. And that would potentially put this, well, that would put this on the backside of this bearish trend. Right? And then you'd be building the case for the upside, but to roll over. Okay? So that's one way of looking at this. Now, to build a bearish case for today, then it's simply, well, just a continuation. You know, this sell-off hasn't ended. Looking left, therefore, a natural area to be looking for the price to return to would be the origin of this displacement. So in here, and below that, down here, as targets. So we'll just mark that off, the top of the breakout area. In here as well. And then finally down into here would be the areas to look at. Mark these lows off as well while we're down here, why not? So it seems we've already cracked into, I'll get rid of that white arrow. So we've already tried to break into this. So we are testing this demand area, right? Now on the day, we've had a correction up. That's what that pin is. So the thesis would be, well, we've come up to test deeper down. Maybe we'll have another push into here. Maybe we'll have one, two. Maybe we'll have a third push. Maybe Monday. Maybe we're too premature on our thesis to come down, to go up rather today. Perhaps we've come up enough. Perhaps this is going to be resistance in here. So mark it from there, in fact. So all of this could be resistance for the day ahead. And we're going to roll over. So this W formation will play its role in a reversion pattern. So whatever move we're getting at the moment to the upside could tail off, retest the neckline, and continue for the sell-off. So there's one to satisfy the bears. Okay. Any trade setups now? I don't know. I've just come in, so we're just going through the charts. So sticking with this euro, what we would need to do, if we're looking for the market to run higher, we're going to need to see this high here broken. Okay, as that is the structure. Just bear with me, I'm looking something up. Right. So, if we move down to a 15-minute chart on this, we got a breakout here. So what we might find, and if we stick to the rule that 80% of breakouts fail, so if this fails and comes back in for a retest of the peak formation, or the W and neckline, right? If this were to hold and give us bullish structure, the thesis is that we're coming up. So we're going to keep an eye on that. I'm just going to get rid of that W, it's in the way. So for now, what we're looking for is the price to come back in, bottom out, and return higher on the bullish side of things, right? So in that respect, we've got this bullish trend. Let's go to a lower time frame to see if we can find any structure. Okay, so for me, this area here, okay, is going to be important as support. So if it breaks below that, which I think is pretty probable, we've already broken that M. Coming back up to test this area here as resistance pretty firmly. Now, perhaps we're going to get a break of the highs, perhaps not. It's a pretty firm retest. But until we've broken down here, I'm going to regard that we are still in a bullish trend. And I just have to move the trend line in a bit. So let's see. So this may continue higher, but ideally, what we need to see is this market come back inside and we can start to build a thesis as to whether there's going to be upside momentum or if this is flaking off to the downside. In terms of trade setups or not recommended, I mean, there can be trades that occur now at this time of day, absolutely. New York opens around about 7 o'clock, roundabout. I mean, that's the official currency open, Forex market opening, the crossover between London and New York. And this is where volumes are highest. Generally speaking, the closer we get to the Wall Street Open, however, um, I find there are more high quality opportunities and setups. The kind of breakouts, reversals, continuations um, that don't come back before getting close to Wall Street or much further away. Well, having said that, you also get these types of breakouts and one-way flow around lunchtime in New York. We've certainly been seeing that of later in the day. Um, but this time of the day, well, for me, what I find is there tends to be you get setups and choppiness. So you can get into a trade and it's maybe a scalp, a 10, 15, 20 pip scalp, whereas the runners tend to happen around the Wall Street Open, which could be 50 pips and one-way traffic. So when you're on board, it's low stress, um, and they don't come back on you. So that's what I'm trying to hunt down. Okay, so we've covered the euro. Any others, guys, that you're looking at? The US 30, I've been asked. So we've been looking at this all week. We got this breakout of the support zone. So my thesis that we were breaking up to come down and then continue was revoked due to the strong movement we got yesterday to the downside. That failure there, railroad tracks, and a continuation. Now, I did suggest that perhaps this is a spring, so therefore this will be met with buying and will come back up. So this is essentially a stop hunt and then a continuation to the upside. So that is just a theory, not advice. If anything, this looks as though it could come up, retest the lows, and roll over. All right, we are still on the front side of the bearish trend. Okay, if we come out to get rid of these sessions, we come out to a weekly chart. Let's have a look how we're set up. Right, so struggling on the upside, pins up top, failing to break up through these highs, and then on the front side still of the bullish trend, so it's coiling. This would be an interesting candle to look at for support structures. But noting we also have the M formation reversion pattern. So trendline support. Perhaps we are going to come up and retest the neckline. So this is how multi-time frame analysis is extremely effective. So if you're looking to short this, be concerned that of that M formation. Okay. Now what we're going to do is we're going to look at this candle over here on a lower time frame to see what kind of support structures there are. So we'll just mark the lows first of all. Give that green for support and the high for resistance, red. Go down to a 4-hour chart. And here we can start to break down that weekly candle and look for support structures. So at the moment we are here at 34,470. Let's, where are we? In fact, hold on. No, we're lower down. 34,246. Down here somewhere. So we've got this candle here. As support. And then what I can also do, I'm not sure if I can do it from bar replay, but I'd like to put a volume profile on this leg. So from there to up here. So we've got the point of control up here. We'll mark that with a dashed line. So that's our point of control. And I'll make it a different colour, in fact. Orange. So we've got high volumes in here. Potential resistance over here. There, support. Here. Finally down here. The highest node is in here. Is that right? So we'll just mark that off and move back to where we're at. Okay, so that gives us a support profile for the time being. So the point of control is back up in here on that weekly candle. So that is interesting. So perhaps I move back up into the inside. As I spoke about yesterday, we're meeting support at the moment. A break of that support, well, these lows really, opens risk to down here, here, and then further down. Okay, so we'll just leave those levels on as targets, and we'll wait to see how the day pans out as we build up towards the open of Wall Street. Okay. Right, looking at gold then, I just want to mark the day count on this as well. 3-day cycle, template. It's looking very messy, the chart, I do apologise. Yeah, there's nothing really here to go on. It's all consolidative stuff this week. We've sort of pinned either side then of the opening range. So it's as if we came up to stops and then came down for stops. Looks like a typical Wyckoff kind of schematic accumulation to me, but let's see how we get on. By that I mean that, so we've cleared the stops to the upside and the downside. This is the spring, come back up inside to move up. But that's just speculation. Um, what we can do is draw a Fibonacci so we can get some confluence, make this chart even messier. It's worth noting then the 38.2 on that bearish impulse comes in at 34,300, a nice round number for the algorithms to target. Just above last week's lows, and then the 50% above that, near the point of control of that weekly candle that we looked at. So target area on the upside there. We'll have to monitor to see if it holds, whether the trend line holds, or if it bursts out. And in that case, you've got to be thinking, well, this is going to continue up. If it struggles to break above that point control midline, the trend line, the neckline of that M formation in here, bear with me. So this neckline here, the M, so if it struggles within here to break the neckline, point control, 50% mean reversion, trendline resistance, there's an awful lot of confluence in that area there, an awful lot of resistance. If we get through it, then that would be significant, be a significant development, and we'd be back to the bullish bias. Right, so I think that's a pretty comprehensive breakdown and plenty of reasons to be monitoring the Dow 30 today. So it could be a day one scenario. So failed breakout scenario and a move up. So I'm going to put it in as a day one. Right then, looking at, no one's asked for gold yet. That's pretty amazing. Let's look at what we're going to look at. I'm going to jump to the yen and then we'll look at what you wanted there, because I think the yen is going to be an important one today. We've got a scenario here where we've seen lower highs. So over here, lower high here, sorry. So high, lower high, lower high. Got a market that's pumped up, failing to continue higher, pulling back, touching into support area as per that candle there. One, two, third push, break of structure, another break of structure, a retest back in, lower peak formation, so potentially a weak low, strong high to continue lower. Okay, that's in the 4-hour chart, so that's an interesting one for today as well. Day 3 in the 3-day cycle. So this was coming into last week's lows. It failed to break them. Consequently, we squeezed up. So day one, failing. So bulls coming into the market. So day one, day two, day three in the 3-day cycle. Sell off on day three. So that is a thesis for today. The downside. Topping formations. Pins up top. Testing these equal lows. So 1, 2, 3. 3 pins. Engulfment. An inside bar. Potentially another engulfment on this hourly candle that's forming. So a lower low would be significant. All right, you see how this is shaping up for a melt to the downside, if not complete collapse. Coming in on the 15-minute chart. So shame that that didn't make a lower low, but nonetheless, it's building up to it. That we've at least broke this structure here, pinned up, strong move down, displacement, correction, and move back into the point of control on the day, all of this volume. So this is acting as resistance and a subsequent move to the downside. So for those looking for a setup immediately, then we may have something. Now what time is it? It's 8:30 New York. So we're going to get another 15-minute candle rotation. By all intents and purposes, this is a trade. So this 15-minute candle is about to close bearish or bullish, mediocre. So this is going to close, looks like, well, let's see. This will potentially close as a pin. If it closes like that, then I'll be looking for the next candle to engulf all of this, and that would be adding momentum to the downside. We've got 3 peaks up top. 3 seconds, right, lovely. So that's closing as we want it. Now we want the candle, this candle here, to be a strong engulfment to the downside. On the 5-minute chart, so this is dollar yen, guys. On the 5-minute chart, we'd want to see, if you want to get ahead of the 15-minute candle closing, and you want to get in earlier, then we'd want to see this 5-minute candle close firmly bearish. And ideally, we want to break this low. So we want this 5-minute candle to break this candle's low, and that could be a trade entry. That could be your entry. The stop above here. I'm looking left, targeting so I'm bringing up my sessions indicator. So we looked at yesterday's low in the US session. All right, that's for a sort of a scalp. Near enough, sort of 50 pips. I say scalp, I mean 50 pips is a very nice amount to walk away with. But that essentially is a sort of a breakout area, and it's a natural area for the market to come back and retest. So the way I would play that is I would be patient and set an alarm on that low, and if you get a break of it, so just think it's crossing. Yeah, see now we're moving away, so that's how why being patient pays off. This is see entry criteria is very very important. You'll have traders here that are seeing that move and they'll be selling in anticipation of the breakout, where in fact there has been no breakout. So it looks very nice, and by all means go short with your stop way up high, but then um, that's not ideal having the stop so far away. Um, Potentially living in drawdown for God knows how long, um, and essentially decreasing your reward. Okay, so we've got that as a day three opportunity on the radar. Okay, so that so far has looked most favourable. And indeed the euro, let me just scan back at the euro. Can't remember what we decided on the euro. Right, so we've got W formation here. So this dollar is obviously under pressure. It's breaking down, isn't it? As we talked about. Okay, looking to what? So someone's asked for gold. Let's look at gold. Right, so gold on the 4-hour chart. Let's put it to a clean looking chart. Early sessions. Right, so what I'm seeing here, although we are down very low in that range and we are technically breaking out to the upside, if we look to the origin of this impulse to move up, we've got 1, 2, 3 pushes to the upside. So one, do this on an hourly, you see better. Right, so this consolidated period here, we broke out here, so we broke out, right? So that's one push out of the range. This is the second breakout. This leg here, so breakout, 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 failing lower lows, signifying that we are on the cusp of for a move lower. Right, so we've got a topping formation. All this volume up here is trapped. These highs. We've come back up into retest, which is very common. So we're trying to retest through here, moving up. Let's see how the day unfolds, but I like the thesis for the downside, but that would require a firmer US dollar and yields. So it kind of goes, well, it very much goes against the thesis for a weaker dollar, which is what we're seeing. Now, we haven't had that move up into the M formation neckline. We're essentially just breaking to the downside. So there could be a continuation here in dollar weakness. into support, which would be bullish on gold. So perhaps gold has some legs to come up even further into this, towards this resistance area. So this candle here on the hourly looks as though it wants to continue on up. So we've had a displacement, a pullback into support. Right, so this sort of harmonic pattern. Draw that for you. This is on the 5-minute chart, so it's pretty choppy, but visualize it like that for a move up. So this is regarded as support. So there could be a trade opportunity here as well for a scalp to the upside. Pins on the bottom. Continuation trade. Okay, so let's get rid of all these squiggles so you can see the actual price. Right, so the thesis is this is all support and the market wants to break higher. Now on the 3-day cycle template, maybe we're going to get a third peak. And therefore, what we might assume is that this dollar, while we're getting downside, isn't necessarily just going to blow off. It's coming in towards support and we'll probably get a move back up and more peak formation ahead of Powell. So this is just some early reshuffling ahead of the event, or the events. We've got Michigan sentiment as well. Wall Street Open coming up. So this is what I mean by getting, I was going to say getting caught out in, the pre-open volatility can be treacherous because you will be identifying breakouts that fail and then just to be pulled back up in the inside, all right, in a range ahead of the actual open. So the open is where you get the momentum. All right, so we've got a two-way argument really for gold. We could be saying that we're coming up into here for a retest of the highs, but overall we are bearish to come lower into this space. This low-hanging fruit, so that impulse up requires a correction back into the origin of the move, down in here. So that will be regarded as support now, these two. So move up to come down, or a move up to keep going up. So we've had 1, 2, 3, and then if that fails to break down, then the thesis is for a continuation to the upside, which would fit the break of resistance trend moving on up. And that would fit the bearish dollar thesis. technically into these longs, which would potentially fuel the continuation to the upside and the longer term bullish fundamental backdrop for the US dollar. Okay, by selling Aussie CAD, Sterling Swiss, and buying Euro New Zealand close to the current price, let me know your thoughts if you have them. I can have a quick look for you at Aussie CAD. Well, Aussie CAD, Monday, Tuesday, Wednesday, Thursday, Friday. So broke out Monday's range, went up, up, and up, pulled back into the Wednesday breakout. Um, well, this here would be regarded as a resistance that is testing all of that. So where it broke out, struggled a little bit, came down, tested it again here, moved down. So it's come back up into that resistance area. If it fails, then that would be promising you short to be short, and it would be even more promising. You might want to, well, I'd be a seller below here. Yesterday's closing price, round about in here, 87.15. Nearer term, sort of in here somewhere, 87.22. Round it down to 20. Make it a round number. Yeah. Seller below 87.20. Buyer above 87. Let's just put on that pin. Buyer above 87.40. Okay. Sterling Swiss. That's messy chart yet again. So breakout, consolidation, bearish. Clean this all up for you. This is a broken down market, consolidating, stops above 111.80 could be targeted. Let's put a line in the sand as to that low here. So ideally you want to see, if it does break up here, you want to see it rolling back down. If it breaks up here and continues and builds structure, just be wary that that can continue going up. But for your confirmation on your short, you want to get below all of this here. So just put it down there for argument's sake. 111.40 to the downside. Below yesterday's closing price, below today's point of control, below yesterday's point of control and midpoint of the range. So you want to get below all of that. And then you should be Happy sailing to the downside. And lastly, for your request, Euro New Zealand. You do like the obscure pairs. That's all good, it's fine. Uh, so broken down market. Right, so is this a failed breakout? Yes, because we came up inside and closed higher up. Bum, 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 bum. Well, again, that's your resistance. You need to see a continuation above there, and that would be looking as though we're coming right up. All of that to squeeze up into the upper end of that range. So on a breakout of there, 82.95, be concerned for a continuation if you're short. But if we get if this market fails to move up, okay, so we need to get to the other side of this bullish trend line. That's a high high. So that is the line of the sand all the way down here, the lows of the day. Right, so you'll be in the clear probably below 182.20. I'm saying 182.20, I just like to round it up. It's 182.19. Okay, and then you'll be taking on last week's lows, yesterday's lows, targeting last month's lows, or highs, sorry. So that's a breakout, is it? Yeah. Ah. So we've broken out of last month's range. Right, that's interesting. So this up here could all be trap volume for an almighty sell-off. But not all in one day, of course, but over the course, if you're swing trading this. Um, Interesting. Right, so you're looking for failures below 183 in the main and a breakdown, a continuation of this broken down market, at least to test last month's highs, breakout area. So 180.70 on the downside. Right, we're going to look at oil and then I guess we're going to wrap it up, guys. Unless anyone's got any further questions. Right then, so what have we got here? So that market broke out of the bearish trend. It's coming up into, what's that? That is a breakout area from Monday. So we're coming back up into the initial balance breakout area, which is interesting. Right, so what's oil setting up like for today then? So if it's going to fail and potentially squeeze and a continuation to the downside. So we've got this bullish trend that's coming up towards that breakout area of Monday. So you've got Monday's top, M formation, topping pattern. It broke out of the opening price, right? Stacked up here, and then it broke out, came back up to retest it a number of occasions, but continue to stay in the hands of the bears. And the bulls capitulated at this point here, and it just blew off to the downside. Retest of that displacement, right? Choppiness. So we've got a range here. So this is essentially a breakout of this lower consolidation. It's a breakout that may continue if it can get back above. I want to pinpoint this on an exact point. Bear with me. No, I had that right. It's down there. There. So a break above 80.38 would be encouraging in terms of the upside. A breakout and failure would be encouraging for the price rolling over and coming back in on the inside for a downside continuation. All right, guys. So I'm about to create an event for the Powell speech, which will be myself and Wayne covering that for you. Very similar to this setup. We'll share our screens, give insights on the speech, and let's see if there are any opportunities on the back of it. I don't think I'd be inclined too much to actually get involved in the market during the speech. I mean, it might just be a day to stay away completely. We've got Lagarde speaking over lunch as well. It really does depend how things set up, but be buckled up for potential volatility, choppiness. It might be one-way flow, which would be great. You know, getting involved in a market that's just an all-day runner to whatever way it's going, up or down. But we won't know until we get there, right? We won't know. Well, you can never be certain, but we'll get a feeling for what is unfolding, and if there are opportunities for all in, all day, one way stuff, or if it's going to be choppy and volatile, then I personally could do without the stress on a Friday. So, on a Friday for me, it's always important to end strong, go into the weekend having had a good day, and not going in on the weekend on a tilt, because we want to come in, we want to refresh over the weekend, and come in strong on a Monday. All right, guys. So best of luck. May the markets go with you today, and I'll see you a bit later on. Thank you for coming as always.